In 2026, yields in crowded consumer tech are tightening. In response, a massive wave of institutional capital is shifting focus toward the unglamorous, highly fragmented world of physical B2B operations. Many builders and investors now realize that boring businesses are lucrative. The real difficulty lies in determining which specific niche matches your available capital, technical ability, or operational experience. This chart shows the widening gap between two markets. While growth in horizontal software has slowed, spending on U.S. home services is trending toward $800 billion by 2030. Accessing these resilient revenue streams requires a specific set of trade-offs. You have to solve for extreme localized fragmentation, paper-based records, and inconsistent regional regulations. Finding growth in 2026 means moving away from frictionless digital scaling. The highest returns now belong to those willing to modernize operationally heavy physical world businesses. The U.S. home services market, covering everything from roofing to electrical work, is massive, currently exceeding $700 billion in annual spend. Because this sector is so localized, independent operators still hold 80%. The difficulty of managing human capital in the trades is exactly what protects these margins. This operational pain is what generates the multiple expansion premium when these local shops are rolled into a national platform. A major financial leak in U.S. healthcare is the estimated $150 billion lost annually to missed medical appointments. The $3 billion Medicaid non-emergency medical transport market is meant to solve this, but it's currently run by brokers using fragmented, siloed data systems that offer almost no accountability for no-shows. Transportation is often treated as a support service, but it is actually core medical infrastructure. When rides fail to show up, rural patients cannot reach the care that the state has already funded. The 2026 opportunity lies in building API-connected logistics networks. By providing real-time accountability and end-to-end trip tracking, new operators are capturing multi-year state-level contracts. This diagram illustrates the fiscal logic of NEMT. Every dollar invested in patient transport yields $11 in downstream savings by avoiding emergency room visits and keeping chronic conditions under control. To capture these contracts, you have to navigate slow state bureaucracies and overcome deep-seated institutional mistrust in rural communities. Solving the unglamorous logistics of physically moving patients allows an operator to secure highly stable, state-backed infrastructure contracts. General-purpose software often fails in the physical trades. A standard project management tool cannot replicate the specific compliance, submittal, and safety tracking required on a construction site or an HVAC job. SaaS builders are finding success by going hyper-niche, building software exclusively for the strict workflows and daily compliance needs of a single trade. This breakdown shows how the revenue model is evolving. The addressable market expands significantly when a platform moves from charging for software seats to processing the entire financial infrastructure. Embedding financial tools directly into workflows drives high durability and net dollar retention above 110%. Because these niche markets initially appear small, founders often need longer capital runways to survive the time it takes to prove the value of their embedded fintech. By mastering the hyper-specific details of a single trade, SaaS founders secure a dominant position in the industry's payment flow. When the software handles the money, it becomes nearly impossible for a customer to leave. This quadrant chart maps the core lesson of 2026. Fragmentation creates a premium. The more difficult an industry is to navigate, the wider your protective moat. For search funds and operators with capital, the best path is pre-cycle home services. This sits in the capital-intensive and localized quadrant. Your trade-off is the need for high-touch, human-centric management rather than technological scale. Software builders who understand financial architecture should target vertical SaaS to capture industry payments on a national scale. Here, the trade-off is the time required to become a deep subject matter expert in a physical trade you may not initially understand. Logistics experts who can manage large government contracts should target the rural NEMT gap. In this sector, you trade intense bureaucratic friction for the security of winner-take-all state infrastructure contracts. The largest opportunities in 2026 are found by looking away from the screen. Put on a hard hat, embrace the fragmentation, and do the unsexy work.